in many cases, investors will be selling bonds. They'll be selling treasuries and other fixed income investments. And so that will help push yields up, which may also put more pressure on the Fed to print more money to buy bonds to stop yields from rising, which will just accelerate the debasement trade and the exodus out of dollars and into gold. If you wait for the dollar to collapse on foreign exchange markets, if you wait for the bond market to crash, well, I mean, it's pretty much all over now, right? What are you going to do then, right? You have no time to prepare for it. You have no time to maybe adjust course and try to prevent it. It's too late. People should be looking at the early warning sign of the price of gold and say, wait a minute, this is a reflection of a loss of confidence. We need to act quickly before the whole thing completely implodes, which is going to happen.
The world is ignoring one of the clearest warning signals in modern financial history: gold. Its relentless rise isn't a coincidence or speculation. It's a barometer of collapsing confidence in fiat currencies. The bond market is showing signs of strain, and the dollar's credibility is eroding faster than policymakers are willing to admit. When yields rise, the Fed's only response will be to print even more money, buying bonds to maintain the illusion of stability. But every new dollar created weakens the currency further, fueling the very crisis they're trying to prevent. Waiting for the dollar to crash or the bond market to implode means waiting too long. By then, the damage will already be done. Peter Schiff, a renowned economist, author, and CEO of Euro-Pacific Asset Management, has warned for decades that the dollar's decline would ultimately lead to a monetary reckoning. His analysis highlights gold's enduring role as real money, a tangible store of value immune to political manipulation or digital illusion. In a world chasing paper and code, holding something real isn't just a hedge, it's survival. Stay informed, stay prepared, and continue to build assets that last. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
When I started buying gold when it was under $300, I bought it specifically because of the expectation that the U.S. currency would be debased. It would depreciate. And that's exactly what has happened. And I think the trade has got a long way to play out. I think the dollar is going to lose a lot more value in the future than it's already lost in the past, which means the price of gold is going to go much higher. You're going to need a lot more dollars to buy an ounce of gold. Now, if people are making that trade and buying Bitcoin, I think they're doing the wrong thing. I think they've got the right idea. They need protection from a weak dollar. I just don't think Bitcoin is going to provide it. Now, as far as the observation that if there really was a loss of confidence in the dollar, then we would see a big drop in the dollar, not just against gold, but against the euro or the pound or the yen, and we would see it in the treasury market. Now, my answer to that is, well, first of all, there's not a lot of confidence in the pound or the euro or the yen either. And so investors are losing confidence in general with fiat money. And so everybody is buying gold. Right? So it's not simply that people are worried about the dollar. They're worried about other currencies too. But I do believe that at some point you will start to see more pronounced dollar weakness even against other fiat currencies. In fact, in the first half of this year, the dollar dropped about 10%, and it was off to its worst annual start in like 50 years. So that's some indication that you're seeing the confidence in the dollar erode more than in other fiat currencies. But I think that by next year, you're going to see a much weaker dollar on foreign exchange markets. And so that will be happening. Now, as far as the bond market, we've already seen that. Because if you recall, the last time the Fed cut rates, and they cut rates before they started this new cycle, they cut rates by about 75 basis points, and long-term rates went in the other direction by the same amount. And very few people expected that. They thought when the Fed cut rates, bonds would rise. Instead, bonds went down. I think that was an indication of an erosion of confidence in the world, in the U.S. government's ability to repay its debts and to service its debts. So I think we've seen it in the failure of the bond market to rally. We haven't seen like a big crash in the bond market yet, but the bond market hasn't rallied the way a lot of people would have expected. And I think that's coming. So I think the people that are complacent about $4,000 gold and who think, hey, there's nothing to worry about because we haven't seen a dollar crash yet against the euro or the yen, or we haven't seen the bond market crash. Those things are going to happen. But the problem is if you wait for that, if you wait for the dollar to collapse on foreign exchange markets, if you wait for the bond market to crash, well, I mean, it's pretty much all over now, right? What are you going to do then, right? You have no time to prepare for it. You have no time to maybe adjust course and try to prevent it. It's too late, right? People should be looking at the early warning sign of the price of gold and say, wait a minute, this is a reflection of a loss of confidence. We need to act quickly before the whole thing completely implodes, which is going to happen. And the fact that nobody is heeding the warning of gold is why it's inevitable that the crisis is going to happen, because nothing is being done to try to prevent it. You would be wrong in claiming that gold has no value or no use. It is objectively the most useful metal that exists. It has properties that no other metal has, and therefore it has more uses than any other metal on Earth. The only reason that gold is not used more often is because it's too scarce and too expensive. But it is certainly the most useful metal on the periodic table. And if you appreciate the properties that gold has that make it so unique and that make it so valuable, and why it has been valued for thousands of years, right? It's not an accident that gold has been around for so long and has maintained its purchasing power over the centuries. It's not about just a irrational belief system. Gold objectively has value, right? You could dispute how much value, but it has value as a rare, precious metal that has properties that allow it to be utilized in so many different industries. And the fact that it's also used as money, and the fact that central banks hold it as money, yes, that is yet another use for gold. But without the underlying value as a precious metal, it would have no value as money. It could not serve as a store of value if there was no underlying value that was being stored. See, that's the problem with Bitcoin. You don't store anything. You have Bitcoin, you've got nothing. Now, yes, Bitcoin has a price because somebody's dumb enough to buy it, but that doesn't mean the price is going to be there in the future, because you cannot store price. You can only store value, and Bitcoin doesn't have that. But one of the reasons that I think it's still going on is the Bitcoin community has got Wall Street in on it, and now the U.S. government. So they're pushing the envelope and casting a wider net. And so they're getting more people suckered into this whole thing. So there's been new buyers to keep it going. But even Wall Street and even the Trump administration, there's a limit to how big they can make this. And we may have already reached it. I don't know. We just had a significant correction in the price of gold. Gold went from almost 4,400 down to 3,900. So a 10% drop in the price of gold, and Bitcoin fell. It initially caught a bit of a bid when gold broke the first time, but then it lost that rally and has now surrendered the entire rally. So Bitcoin is not rising when gold goes down, but it will go down, I believe, when gold goes up. So I think the worst thing that could happen now for Bitcoin is a correction in the NASDAQ and a new high in gold. So if that happens, I think Bitcoin is going to just get demolished. We'll see how low it goes. But yes, I was wrong 10 years ago, 15 years ago, in that I didn't buy Bitcoin as a gamble, because obviously with the benefit of hindsight, the gamble paid off dramatically. I don't think I was wrong in my characterization of Bitcoin. It hasn't changed since I first found out about it. I mean, all that's happened is more people believe in it, but they believe in a lie, right? It's a fraud. But yes, now there's a lot of people that are convinced that nothing is something, but I think they're running out of fools who are going to take that leap of faith. And you need an ever increasing supply to maintain the dynamic. And I think as you start running out of new converts, the price starts to fall. But eventually, as the price really starts to fall, some of the believers will come to their senses and stop believing. And that's when Bitcoin is going to have a much bigger problem.
Wall Street is finally waking up to what sound money investors have known for decades. Gold's time has returned. As institutions begin allocating even a small percentage of their portfolios to physical metals, the ripple effect could reshape global capital flows. Each dollar shifted into gold must come from somewhere, and increasingly, it will come from bonds and treasuries. That rotation will push yields higher, pressuring the Federal Reserve to step in and buy bonds to stabilize the market, a move that will only accelerate the decline of the dollar and fuel the ongoing debasement trade. Meanwhile, the speculative euphoria surrounding crypto has reached unsustainable extremes. What began as an anti-establishment asset is now fully embraced by Wall Street, Washington, and political elites. The broader public sees it as a guaranteed win, a classic sign of a top. When this illusion breaks, capital will rush back toward tangible assets rather than digital narratives. Let's get back to the interview.
I think, Wall Street just started to figure this out in the last few months. And so I think, it's going to be more broadly adopted throughout Wall Street. I think you're going to see more portfolios start allocating something to gold, whereas they've allocated nothing in the past. And so as they start allocating something to gold, that's going to benefit gold. And it's also going to harm whatever it is they're selling to buy the gold. And I think in many cases, investors will be selling bonds. They'll be selling treasuries and other, fixed income investments. And so that will help push yields up, which may also put more pressure on the Fed to print more money to buy bonds to stop yields from rising, which will just accelerate the debasement trade and the exodus out of dollars and into gold. Wall Street has a pretty checkered past when it comes to bubbles. They were big buyers. Those firms were big buyers of subprime mortgages at the peak. They didn't see any risk in the mortgage market leading up to the 07, 08 crisis. A lot of those big banks would have failed if it wasn't for the bailouts by the U.S. government with TARP and other programs. So Wall Street is just about making a buck, right? And so if the ducks are quacking, they're going to feed them. That's how the main Wall Street firms operate. So yes, if there's a feeding frenzy, if people want to spend money on crypto-related investments or tokens, Wall Street will make money selling those investments, managing those investments. They're making a lot of money underwriting companies, IPOs, secondaries, all these offerings in crypto-related industries. So yeah, there's a lot of money. Wall Street, they don't care what ultimately happens. As far as they're concerned, all these companies can go bankrupt. All these investors could lose money. It's like a casino operator. Like I'm operating a casino and, the house wins, but all the people who are gambling are going to lose. The problem is, at least when you go to a casino, you're gambling. But a lot of people that are buying Bitcoin and other crypto, they don't realize it. In fact, they think they got a sure thing. They think they can't lose. That they're going to be in for a rude awakening. And I do think at the end of the day, there's going to be a lot of lawsuits. I mean, the lawyers always win, right? And what's going to happen is a lot of Americans are going to lose a lot of money, and they're going to be looking for somebody to blame, and they're going to be looking for a way to get some of what they lost back. And that's where the lawyers are going to come in. When I say hardly anyone owns gold, I'm not counting gold jewelry or gold that's in your cell phone, for example. So if you count people who own gold as a metal, almost everybody owns some gold, right? But I'm talking about buying gold as a store of value, buying a gold coin or a gold bar, right, as an investment. And there, hardly anybody is doing that. A very small fraction of investors. I would say that probably more Americans have bought Bitcoin as an investment over the last several years than have bought gold. And it's probably not even close to in raw numbers. But what I was pointing out with that post is, I've been in the investment business for, over 35 years. And I've seen a lot of bubbles where people are really wedded to their conviction in a particular trade, whether it was with the dot-coms or real estate. But I've never seen people more convinced that they can't lose and that not only is what they own going to go up, but it's going to skyrocket, 10x, 50x, 100x. Right? And that is the people who own Bitcoin. So they're more convinced than anybody that they can't lose in the trade. And when you see that kind of conviction, it's usually wrong. When people are that arrogant and that convinced that they can't possibly lose, they end up losing. And also, if you look at the investment case now for Bitcoin, if the U.S. government is now behind Bitcoin and pushing money into Bitcoin using the power of the presidency, and not just the president, but a number of congressmen and senators are now in the pocket of the crypto industry, and they are trying to shape policy to direct capital and resources into crypto. This is not the free market saying we should put money in crypto. This is the government using the power, of force and regulation and everything to get people to get into Bitcoin. Talking about the U.S. government using taxpayer money, selling our gold, buying Bitcoin. And then when you have the president's family completely all in on crypto, the Trump family is now the crypto family. They've made more money on paper in crypto since Trump was elected than they've made all throughout their history in real estate and The Apprentice or, whatever they did. They've made more money. And so people think, how can this not work? Because the president wants to enrich his friends and his family, and he's going to make sure that Bitcoin goes up, right? So you've got all this out there that everybody knows. There's nobody in the financial media that's bearish on Bitcoin. Everybody concedes it can only go up. First of all, I think there's zero chance that Bitcoin will become the new gold. So I think it's irresponsible to own any of it. But if I could turn back time, and when I first learned about it in 2010, and I thought that, hey, maybe this will catch on. Maybe people will buy this instead of gold. I remember thinking about that. And I thought about buying it, like maybe I should buy some as a hedge because I got a gold business. What if a bunch of people are dumb enough to actually buy this? Maybe I should buy it now just in case. So I did think about it then when hardly anybody knew about it. And at that point, sure, I could have thrown 10 grand at it and it'd be $1 billion now, whatever. So it may have made sense at that time to just put a little money as a hedge. But based on where it is now, based on the fact that, there's nobody that doesn't know about Bitcoin. Wall Street has embraced it. The president has embraced it. You go to these Bitcoin conferences. I was at one in Vegas. There were 40,000 people there. I'm going to a gold conference next week. There won't even be 1,000 people at that conference. And that conference has been going on for like 50 years or 25, you forget. But so the number of people who are interested in and enthusiastic in owning Bitcoin is skyrocketed. So at this point, I said it's the consensus trade. There's a lot more that can go wrong with Bitcoin. They can go right. I would much rather take money that I would have put in Bitcoin and buy gold and silver mining stocks. I think if I'm going to gamble on something, and I look at mining stocks as more of a gamble as opposed to just physical precious metals, but if I'm going to gamble, that's what I want to put my chips. I just think the upside potential is so much greater in these mining stocks than it is in Bitcoin. Could Bitcoin double from here? I suppose it could, but that's not a big enough move to even be of interest to me compared to the fact that I think mining stocks can go up 5 times, 10 times more, even the smaller ones. On the other side, Bitcoin could collapse by over 90%. I don't think that's going to happen with mining stocks. So I think I've got less downside risk in mining stocks and a lot more realistic upside potential.
The illusion of stability is fading fast. As the monetary system strains under debt, inflation, and manipulation, confidence is quietly shifting toward tangible value. The world's largest investors are starting to realize that wealth stored in paper promises can disappear overnight. What remains enduring are assets free of counterparty risk, the kind that history has proven to outlast empires. The growing institutional interest in gold isn't about speculation, it's about survival in an age of financial distortion. The system is approaching a point where every move to fix the problem only makes it worse. More money printing, more leverage, more illusion, all leading toward the same destination. Those who continue to trust in policy rescue will learn that faith in fiat is not a strategy. The wise are acting before the crowd, shifting quietly toward the assets that don't need saving. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.